Hello and welcome. You have tuned into Buy Now, Sell Now and ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts and you can connect live with us on a WhatsApp number that will be flashing on the top of your screen. We will focus on the Buy Now, Sell Now topic that is related to the crude oil prices. But before that, let's have a look at what the markets are up to. So Cheryl, a flattish trade coming in on the benchmark indices as of now, but the broader market picture is quite healthy today.
Yes, absolutely, Shrishti, and that has been the picture of broader markets for 2 days in a row, at least is what I can say, because you had yesterday, so the broader markets are outperforming the benchmark indices. Today also, they are actually outperforming the benchmark indices, holding on to positive territory, at least for now. Small cap index, it's charting its own territory, 0.7% uptick coming in for the small cap index. Let's take a look at what the benchmark indices are doing. Then you have Nifty that is struggling to surpass the 19,700 mark. If you look at Nifty Bank, that is trading flat with a negative bias as we speak. The advanced decline ratio for now is tilted in the favor of the advances. Talking about the list of gainers, then L&T is the top gainer on the Nifty. Your UBS has come up with a note giving a target for L&T that is the highest among the other street estimates. You have Adani Port, Sun Pharma as well as Axis Bank among the other set of gainers. While on the losing end, you have Tech Mahindra, that's the top loser on the Nifty, 3% downtick coming in for Tech Mahindra. Yesterday, remember, you had the Morgan Stanley note giving a negative picture also for Tech Mahindra among the rest of the IT pack, but you have Asian Paints, Britannia, M&M, Eicher Motors as well on the losing end. Add to that list, you have ITC also that is subdued in trade today. Talking about the sectoral indices, then is the IT index, FMC index that are among the top losers on the sectoral front. But on the flip side is the PSU Bank index, top sectoral gainer, 1.3% uptick coming in for PSU Bank. So you can safely say once again PSU Bank's actually outperforming its private peers. But one of the key factors globally that seems to be racing ahead along with what is happening elsewhere apart from the equity markets is definitely the crude oil prices, Shrishti. That one is at a November high.
Yes, surged to that $97 per barrel mark. And with this, let's quickly take it across to our colleague Soumit, who is joining us in the studio to tell us that what this $97 per barrel mark mean for India, and with respect to that, which companies are in focus.
Well, for India, it is a negative development given the fact that we import nearly 85% of our crude requirement, and every $10 per barrel rise in average Indian crude oil basket prices inflates the current account deficit by around 14 to 15 billion US dollars. That is close to 0.4% of the GDP, and it also increases the retail and the wholesale inflation by around 50 to 60 basis points. That is for the retail inflation, and wholesale inflation by around 125 to 135 basis points. But there are a host of Indian companies that are dependent on crude, because crude is one of the raw material, crude or crude derivative is one of the raw material, and a rise in crude oil prices does impact the margins as well. To start off with, it's the oil marketing companies that are the majorly get impact because of rise in crude oil prices, and that is because the marketing margin gets impacted very badly. In fact, the gross marketing margin, if you see that the oil marketing companies were earning on petrol in the June ended quarter, stood at close to 13.7 rupees. That has come down now to 1.7 rupees because of the rise in crude oil prices, and on diesel they're in fact losing money. They're losing 6 rupees every liter of diesel that they're selling in the market, as against a 9 rupees that they were earning in the June ended quarter. Apart from this, there are oil explorers. They generally tend to benefit because of higher crude oil prices, but given the fact that the government might go ahead and increase the windfall tax, the impact is expected to be largely neutral, and this will be neutral largely for ONGC, Oil India, Vedanta and HOEC. Ceylon Exploration is one of the another oil explorers which might stand to benefit because they are still not under the purview of windfall tax currently. Apart from that, there is paint, which has nearly 40% of the raw material cost related to crude oil. Aviation, fuel cost is one of the major costs for an airline company. Nearly 37 to 40% of the total cost is fuel cost, and a rise in crude oil prices, if not passed on to customers, will definitely impact the margins. Lubricant manufacturers, well, they manufacture lubricant through oil. Nearly 50% of the raw material is oil, and that will impact the margins. For tire companies, it's synthetic rubber, carbon black and other chemicals, which the prices of these are derived with crude oil prices, and with the rise in crude oil prices, the prices of these chemicals will also increase, but with a lag. For cement companies, nearly 40 to 50% of the total cost is either directly or indirectly related to crude, and increase in crude oil prices will definitely impact the margins. But currently, if you see, cement companies have gone ahead and taken a price hike, so the impact could largely be neutral for cement companies. And apart from this, there are a host of specialty chemical companies like Balaji Amines, Alkyl Amines, Camlin Fine, Clean Science, Rosario Biotech, Nossel, Aarti Industries, Deepak Nitrate. The key raw material costs for these chemical companies are also either crude or crude derivative, and a rise in crude oil prices with a lag effect will definitely impact the margins going ahead.
Right, Soumit. So these are the companies that will have a negative impact on margins due to the rise in the crude
Yes,
oil
definitely.
prices, apart from us also bearing the brunt as retailers as well. But talking about, there are some pockets as well which will benefit, right? Like the downstream companies, they tend to benefit, isn't it? From
Well, the
higher,
upstream companies
the
technically.
upstream, I beg your pardon, yes, the upstream companies.
Well, yes, but if you see, the impact could largely be neutral for them, because
Okay.
government has been every 15 days increasing the windfall tax. So given the fact that crude oil prices have increased, government might go ahead and increase the windfall tax on production of crude. So for ONGC and Oil India, HOEC, Vedanta, they produce a large barrels of crude. Hence, the impact on them, on their realizations, in fact, would largely be neutral, because whatever extra they will be earning because of higher crude oil prices will actually be given to the government.
Right, all right. So that's the impact coming in for the higher crude oil prices for the companies. And given the fact that along with the higher crude prices, we are also seeing a depreciation in the rupee level as well. So that's like a double whammy when it comes
Double
to
whammy. In fact, for oil marketing companies, it could be triple whammy, because the Singapore gross refining margin, that is the other business, refining business, that has also been impacted, because we have seen a sharp drop when it comes to the Singapore gross refining margins. From
Right.
$15, it has come down to now $6, I believe.
All right, so there are a lot of negatives actually when it comes to the rise in the crude oil prices in the market. Thank you so much, Soumit, for putting that into context. Because when you talk about crude, you only tend to think about OMCs or oil or rather ONGC or Reliance Industries, but you fail to even see the larger picture, because you have paint companies, specialty chemical companies as well, which use crude as a derivative or raw material. But let's pose a question to our experts then. What do you do with such sectors, given the fact that it is commodity driven, there is a lot of volatility that's happening in the commodity market? Whether should you bet in these companies, and if you've already betted on these companies, then what should you do? We have Mr. A.K. Prabhakar joining us on the show, and along with that, we have Kunal Bothra as well. Very good morning to both of you all. And Mr. Prabhakar, let me come to you. You had Soumit rightly outlined the companies which are likely to be impacted, given the fact that we've seen the sharp rise coming in the crude oil prices. What's your take? How should one look at this entire sector, or all the sectors that actually use crude as a derivative?
Morning. No, there are many companies which will be impacted. Even tire companies is one thing, I think he missed out, but they also will be impacted. But we need to understand, there are few companies which are likely to benefit in the long term. So ethanol mixing is something where, E20 policy is there. So, E12 is something, now we do it, 12% is a mixing. So there can be a chance that ethanol prices can be increased. So sugar companies which have ethanol capacity will be a major beneficiary. Balrampur Chini and Renuka Sugar has the highest capacity in ethanol. And even EID Parry has. So I think few sugar companies should benefit. Even Praj Industries could be one more beneficiary out of it.
Okay, so clearly the sugar companies are expected to benefit on the back of the rise in the ethanol consumption, and that's why because of the news flow that we are seeing in the sugar stocks, we are seeing continued up move in stocks like Barlam Chini as well as Renuka Sugar. But Kunal, coming to you, very good morning first of all, and specifically on the charts, any stock that is making on your radar, because like Soumit highlighted, all these OMCs have been reeling under pressure onto the charts as well. Even paint stocks today are under pressure, as well as tire stocks. So any counter that is on your radar, any call, trading call that's coming up?
Well, yeah, I think, so for example, Reliance looks very attractive. ONGC is something which looks very attractive from current levels. I think both these stocks have done reasonably well. On the Brent crude, I would probably expect that this is a breakout of sorts for the Brent crude on charts, because we've managed to hit a double bottom on the Brent crude. and I think that's where the breakout closer to that 88-90 mark was very, very crucial for this asset class. We could now be looking at possibly the Brent crude coming towards 99 to maybe even $100 per barrel, which is the next set of major resistance for this asset class. So in terms of a trend, this is a steady uptrend for crude oil, and it could probably trickle into these few larger cap names like Reliance, ONGC, etc.
All right, so it looks like this is a larger uptrend coming in for the crude oil prices is what Kunal is saying, and also $99 per barrel cannot be ruled out, also approximately $100 per barrel. You all have a lot of global also brokerages that have raised their forecast actually for crude.
Yes, absolutely. And because of that, Kunal is liking stocks like Reliance and ONGC. So those are the calls that are coming up on the back of the rise in the crude oil prices. So do have a look at that. But with this, viewers, it's time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere. As we come right back, it's time to take all your stock-related queries. So stay tuned.
Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on the WhatsApp number that will be flashing on your screen. Do remember to mention your name, the stock that you're looking to invest in. If you're already invested in a stock, mention the buy price, the quantity, the time horizon. That is very crucial because in that way, we will be able to take your query to the right set of our experts. Today on the expert end, we have Kunal Bothra as well as Mr. A.K. Prabhakar joining us on the show. Once again, good morning to both of you. And let me kickstart taking all of the stock-related query that we already started getting in on our WhatsApp number. This one is coming from Sridhar. He's writing to us from Coimbatore, and he's bought G Shipping at a price of around 798 rupees per share. He wants to know at what rate should he look to actually exit. Kunal, what's your take on G Shipping?
Well, I think G Shipping is an interesting stock. The stock has done exceptionally well in the last 1 or 2 years. I think 200 was the low the stock had made in 2019-20. From there, the stock is almost at 800 or 850 plus currently. Very good chart for G Shipping. I'm not sure whether you are looking at this as a potential extension, because if you can hold on to it, say for another 6 months to 1 year, I would probably expect even the stock to scale past about the 4-digit mark. So if you can, hold on to the stock as of now.
Okay, moving on, and Mr. Prabhakar, the next query is on Cummins India. Question is from Ashish from Mumbai, and he's holding shares at an average price of 1,530 rupees and having a profit of approximately 12%. He wants to continue holding this for the next 5 to 10 years. So what will be your outlook on this one, and should he continue holding this or not? Firstly, your comments on the same.
In capital goods, Cummins has become an Indian manufacturer, and it is a major exporter from India. And the pollution, the latest engine gensets are latest compliant. So I think Cummins will have a major advantage compared to their peers. I think if you are ready for 5 to 10 years, this is one of the best to buy. So, and we are moving towards a lot of things in genset, where Cummins will be a major beneficiary.
All right, this one is coming in from Soumya, writing to us from Chennai, and Soumya wants to know which one is better to buy for the short term, Kunal, Federal Bank or South Indian Bank, and also if you could provide some sort of a target that she can look at on these counters.
See, both of them are good. Federal Bank is slow moving. The stock, I think, has recently managed to break past about 150 mark, which has been a huge psychological barrier for the stock. So maybe it may consolidate for a couple of days over here before it gathers steam back again towards a breakout on the upside. South Indian Bank is something which I would probably term it as more high beta, so differentiated stock. You can consider this stock as well for buying and possibly a potential positional target closer to 31, 32. But you may even look to consider from the mid-cap arena 2 names. So Central Bank is something which I highlighted yesterday. That's a bit of a high beta stock trading at 50 to 53 mark. Would look out for targets in the upward range of 60 plus levels. And if you're looking at for IDFC First Bank, that's another stock which I believe could even come closer to 99 to 100 mark, possibly in the next couple of days.
Okay, that's the take coming in on IDFC First Bank. But Kunal, what's your take on Havells? Anant Krishna from Madurai has bought 100 shares at a price of 1,428 rupees. Wants to know the short-term prospects on this one.
See, I know Havells has been a stock which has been very slow in terms of the chart structure. The stock has already confirmed a breakout of a major triangular pattern, and I think it's almost going on for the last 1.5 year, if I'm not wrong, slightly more than that in terms of time frame. So it's a matter of time that the stock would probably pick up a significant pace. I would be extremely bullish on Havells. It's just a matter of time that the stock could pick up steam and maybe even cross above levels of 1500 to 1600 over the very near term. So would be bullish on the stock. Difficult to time it whether it will happen in the next 1 month or so, but I believe eventually if you give it time closer to 3 to 6 months, the stock should see a substantial upside.
All right, this next one is coming from Prathamesh. He's writing to us from Mumbai. It's a short-term query, so let me hold on to that one and let me try and see if I get a long-term query coming in this time around. And this one is coming in from Janvi, writing to us from Bangalore. She wants your view on HAL, Mr. Prabhakar, because she's saying that that particular counter is now down. The reason why the stock is down today is adjusting for a stock split actually, Janvi, so don't have to worry about that. But HAL, what's your take on this particular counter, Mr. Prabhakar? Good time to enter the stock given the fact that this one has seen a sharp rally just like the rest of the defense pack.
If you take the defense, PSU defense, this trades at a very attractive valuation. And very soon, their unit near Bangalore will come on stream. So their revenue will also double in the next 2-3 years. So I think HAL is the best buy, even at current level. A valuation comfort is there in HAL.
That's the take on HAL. But Kunal, the next query is from NSS Vijay Lakshmi from Vijayawada, and he's holding two counters. Firstly, having phenomenal returns in Igarashi Motors. He's holding 100 shares invested back in November 2002 at just ₹10, and wants to know at this point in time, good time to book profits in this multi-bagger for him. And the other stock is Prism Johnson's 400 shares entered at a price of 86 rupees. So good time to book profits in this one or hold on?
Well, Prism Johnson is something which I don't track, so I'll probably skip that. But Igarashi Motors is a very attractive chart. In fact, if you manage to buy this almost 2 decades back, then I think you're sitting on some exceptional profits. And I would still believe that the stock has managed to go through a phase of price correction. I think from 1100 levels or 1000 levels, the stock had already corrected towards 250 odd mark. It's now trying to get into a recovery. My sense is that if the cycles be a bit more steady for the stock, then I would probably expect the stock to even come back towards the 1100 mark, possibly in the next 1 to 2 years. So if you can, you've managed to already hold on to it for so many years, I would probably stretch it to another couple of years and look out for targets in the range of 1000 plus.
All right, one more coming your way. Kunal Venkat from Dubai has written to us on Khadim. 50 shares at a price of 220 rupees per share. He wants to know whether hold or sell given the stock is seeing a rally right now.
I would recommend a hold on the stock if you are a medium-term investor, because after this 2 days or 3 days of spike for Khadim, it could be possible that the stock may correct for the next couple of days, say come back towards 285 to 95 range. Given the kind of market we are into, but then the stock is also showing signs of a potential monthly chart breakout. So maybe for another couple of months, the stock may see a gradual uptick. But if this monthly chart breakout gets confirmed, we may actually see a major uptick coming into the stock price. So I would recommend a hold if that's the kind of a time frame which you're looking at.
Okay, moving on, and the next question is coming on Imami, and Kunal, if you could advise Apala Raju on Imami, because he is holding 100 shares from a price of 471 rupees and wants to know that because the stock has been having momentum on a YTT basis is up over 40%. So continue holding this particular counter and any targets in the medium to long term.
See, I understand that most of these FMCG stocks are great stocks to have from long-term play, but my sense is that many of these FMCG stocks are actually going through a cyclical turnaround or a downside for themselves, which I believe could probably extend for at least another few quarters, if not a year at least for these names. So purely in that aspect, I would recommend that you can look to book profits over here and buy back maybe in the next couple of quarters in case if you get a decent correction, say a further 10 to 15% correction or a 20% correction at least could be a good enough time to maybe look to buy back many of these FMCG names.
All right, this one has come from Gauri, and this one is for you, Mr. Prabhakar. And he wants, we just spoke about the defense counters, we spoke about HAL. She wants to know if BEL is a good one to look at for the longer term, and also Vodafone Idea. Do you think anyone should venture into the stock, even if it's for a matter of 6 months, 1 year, 2 year? do you think you should actually go ahead and enter this one?
BEL again, the valuation comfort is there and they are building order book, they are into electronics and warfare and other things. But, when it comes to Vodafone Idea, the July month Tarai report has come where they have lost 15 lakh customers. Every month, you are losing customers. Even, the Tarai head has said, it is a worry that, Vodafone Idea is losing customers. So, in that case, I would not venture into. It is a high risk, high reward, and for me, protection of capital is more important. Where I don't venture into anything where I don't have a comfort or I don't understand.
All right, so
Okay, that's the take coming in on these defense names. But with this, viewers, it's time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, a show where we get you answers for all your stock related queries. And to answer the same today, we have Kunal Bothra as well as Mr. Prabhakar with us. And coming to you, Mr. Prabhakar, for the next query. This one is from Rohit, and he is holding 1,000 shares of Patel Engineering from a price near approximately 60 rupees. And he also has Ease My Trip, 1,000 shares at a price of 43 rupees. Wants to know the prospects for both of these counters.
Patel Engineering, we don't track. Ease My Trip, it is one of the profit-making online travel booking. So their major business comes from airline. But now even IRCTC sells airline ticket. So there is a huge competition in this space. So multi players, their Yatra is also got listed. So I think at current valuation, I'm not comfortable. If the stock corrects 10-15%, I'll be comfortable with Ease My Trip.
The take on Ease My Trip, but anything on charts, Kunal?
Yeah, I think
Patel Engineering.
Patel Engineering looks to be an attractive chart. So, what had happened is the stock moved from, I think, start of 2023 or maybe in the month of March 2023 from a level of 12 or 15 rupees, and from there it went almost like a non-stop rally towards 60 mark. Now what the stock is doing is going through a mean reversion. It may extend for the stock in terms of price as well as in terms of time, but after such a kind of a steep rally, we generally expect that stocks get into a second round of a major uptrend. So what matters over there is time frame as well as the risk appetite to hold on to the stock. If you're looking at this as a portfolio pick or maybe in a smaller part, very small part of your portfolio, then I would recommend to start buying at current levels and then keep on adding at every maybe 4 rupees or a 5 rupee dip for Patel Engineering.
all right, moving on then. This next one is coming on Tech Mahindra. Kunal, we did speak about the IT sector yesterday. I believe you did say that you like Tech Mahindra. I'm not sure of that. But Chandrasekharan from Chennai has 85 shares of Tech Mahindra at an average price of 1,290 rupees per share. He wants to know whether he should average at current price, wait for some more correction. He's saying he can hold on for the next 1 year or so, and a medium-term target also is what he wants.
See, I'm bullish on Tech Mahindra, and my sense is that many of these mid-cap, large-cap IT names could actually go into a strong uptrend, but for that you'll have to give it more than 1 to 2 years as a time frame, because these stocks would get into those short-term issues. Post results, you may probably see some bit of odd corrections here and there for many of these names. But eventually over the next 4 to 5 quarters, I would expect that these stocks should perform very well from where they are at the current juncture. Tech Mahindra is a stock which falls in that category, so I would suggest to hold on to the stock. And in case, as I said, that if the stock gets into a correction or a one-off correction, say maybe comes back towards 1200 mark or 1150 range, that could be a very good point to add or average further.
Okay, moving on. And Kunal, once again, a query specifically for you. This one is from Neeraj Verma. He's a senior citizen and holding 75 shares of L&T, purchased at a price of 2,712 rupees. He wants to add more this particular counter. So what will be your take on this one? Continue holding, or he can go ahead and further average this counter as well?
See, I would not recommend an averaging out for stock like L&T at current levels, because traditionally and by the historical nature of the stock, it's a low to moderate beta stock. Now the stock in the last 6 months, of course, has seen a phenomenal uptrend, but you can't expect a stock like L&T to keep on rising the way it has done in the last 6 odd months. There is bound to be a point where the stock may consolidate and go through a time-wise correction. So buying these stocks at the peak of the price rally may not be a good strategy. So something like maybe last week when the stock had corrected by a margin of 5% or so, around 2800, 2850 mark. That was a good point to try and add on to L&T. So still maintain that bullish stance, but maybe not the best price to try and buy or average.
All right, let me just mark the flashes on the bottom of your screen because you have the CAD numbers that the RBI has released for the quarter gone by, or rather that's for Q1. The current account deficit is at 1.1% of the GDP as against 0.2% of GDP a quarter ago. So there you go. You have this current account deficit that is widened on a quarter-on-quarter basis. But if you look at the current account deficit on a year-on-year basis, there is some sort of a narrowing of the current account deficit when you compare it to a year ago. There's a Q1 current account deficit is now at 1.1% of GDP as against 2.1% of GDP a year ago. But the quarter-on-quarter basis, there has been a widening of the current account deficit. Let's take a look at what the rupee is doing at this point in time, because remember the RBI did give a notification that the rupee market and the bond market will be functional today as well as tomorrow. So there you go. The rupee is now at 83.15 to the dollar. But yes, you can see the CAD on a quarter-on-quarter basis, you have the current account deficit that has definitely widened. So need to watch out for that crucial economic data as well. But let me continue taking your query then, and the next one is coming in from Nagesh. Is writing to us from Hyderabad. Good year India, he has 100 shares at a price of around 1,421 rupees per share. Kunal, do you track this one by any chance? He wants a near-term target.
Not really, I don't track the stock, and as it is, I think it's a very liquid name.
All right, by any chance you've had a look at this one on the fundamental side by Mr. Prabhakar?
No, it is a BSE listed stock previously, so I never used to track this.
All right, then let me take a next query then, and this one is coming in from Vishwanath Nair, and he wants to know if it's a good idea to go ahead and look at Gujarat Gas, or is IGL a better bet? What's your take on this one, Mr. Prabhakar?
See, Gujarat Gas, is a good stock. Even IGL, MGL, and these stocks, post Russia-Ukraine war, they have not performed. So I think, once the gas prices stabilizes, these three stocks will start to perform. Now they are out of favor. So I think, if you're a patient investor, you can have all the three stocks or whichever one you like. But Gujarat Gas, more to do with Gujarat side. They have a slight advantage, and valuation is always slightly expensive compared to MGL or even IGL.
Okay, that's the take on Gujarat Gas. But moving on, and Kunal, the next query is on Britannia. The viewer actually didn't mention his name, but he's holding Britannia futures. October futures from a price of 4,630 rupees. Wants to know the short-term trade on this particular counter. Do you believe that Britannia in the month of October can go upwards from 4,630 rupees?
Well, I doubt because the last 6 months, I think 6 or 7 months, if I'm not wrong, 7 weeks, the stock has been consolidating, and that has happened after a fall from 5,200 levels for Britannia, which means that the stock is just trying to go into a time-wise correction before it gets ready for maybe one more round of corrective wave for itself. I would suggest that it's better that you keep a stop loss on this trade. I would probably expect, say for the current month futures, 4,500 as a stop loss for the trade on Britannia. You can probably extrapolate the same for the October series futures for the stock, but I would not be too much optimistic given the kind of chart structure the stock has shown in the last 6-7 weeks of consolidation as well as the last 2 months of price correction.
All right, this one is coming in from Mr. Singh from Pune. Wants a technical view on Aarti Industries. He wants to enter this particular stock fresh and for a period of 3 years. Kunal?
I think it could be a good time to start looking at the stock. Now, I understand that Aarti Industries has been one of the stock which has fallen very sharply. But, in the last 1 month, I think August end, a rally started off for Aarti Industries. The stock moved from 450 levels to 530, 535. And from 535, it's come back towards a mean reversion point of 490, 495, which means that the stock is, and that spike up which had happened on the prices was on the back of some encouraging volumes, and the correction is on the back of some extremely low volumes. That indicates that maybe the tide could probably have changed for Aarti Industries. So it could be a good time to start nibbling into the stock price.
Okay, the next query is from the auto space, and Mr. Prabhakar, do you track Electra Green Tech? Because a viewer named Mali from Hyderabad has been holding 200 shares from a price of 1,130 rupees. So at profits at this point in time, but good time to book profits or continue to hold on because the stock has seen phenomenal run up. So what will be your advice?
No, I think they import materials from China, they assemble it in India. So now anything connected with China, I will be bit uncomfortable. So I will stay away from this stock. If you ask me.
Okay, this one is coming from Ramesh, is writing to us from Kerala. Kunal, he wants to know about Century Textiles. He has 150 shares, purchased at 1,107 rupees per share. He wants to know what's the future of the stock.
You know, I remember, I think just about a few months back, Century Textile had given a 52-week high or a multi-year breakout about 900, 975 mark. And from there, the stock has slowed down its pace of upside, but then it's maintained the trajectory on the upward side. So you're not seeing a cleaner uptrend for a stock like Century Textile, but more of a struggle on the upside, even though the stock has maintained its uptrend. This generally indicates that maybe the stock could be looking out for a retest of the previous highs of 975 or the previous breakout point of 975. So you can consider to hold on to the stock, but I believe 975 could be a better range where the stock may probably try and retest. That could be a point where you may look to average or add further.
Okay, moving on, and Mr. Prabhakar, the next query is from Chandra from Mysore, and he's holding 4,000 shares of EPL at an average price of 203 rupees. At this point in time, continue to hold on any medium-term prospects for this particular counter.
It is a packaging company, so valuation wise, it is attractive. You can hold on, but you need to have a slightly longer duration. But higher crude prices normally impact EPL.
All right, this next one is coming in from Rakesh. Kunal, 1,000 shares of Vedanta at a price of 293. I don't know if you track Piccadilly Agro by any chance, but he's bought it at 118. What's your view on both?
So the second one I don't track, so I'll skip that. Vedanta, I think, in fact, I remember, I think a couple of months back also we had a similar query, and I mentioned that to exit the stock because it's been one of the more weaker charts on the entire middle pack. Even the last, I think, if I'm not wrong, 440 was the high for Vedanta in March or April 2022, and from there the stock has more than halved from those levels of 440 odd for Vedanta. Even the last 6 months, the correction has been very sharp, steep. The stock has been an underperformer. You try and compare this with the matrix of the larger cap metal stocks, how these stocks have panned out as compared to what Vedanta has done in terms of price performance. So I don't see any reason why you should be holding on to the stock. You may have those periodic bounces after that sharp selling the stock had seen yesterday or day before, but I don't see that as an evolving trade of a trend reversal for Vedanta, so I would suggest an exit on rallies.
So this view actually applies also to Subrata, who is asking about Vedanta, whether he should enter afresh. Also, you have Shrikant also from Hyderabad who's asked similar query, but Kunal, his buy price was 320. Still, you would say exit on rally? Yeah,
exit on rallies is what I would recommend. In fact, if you once you get a chance to exit the stock, I think you should probably come back to the traditional names like Tata Steel. You look at Hindalco, I think that's an exceptional chart on the longer term basis. Even JSW Steel, I think, has gone through a decent correction of more than 10%. So it's better to come back to these formidable names.
Okay, moving on to the next query, and Kunal, Gargi wants your view on Strides Pharma. This particular counter has been in focus as the company recently announced a spin-off of their CDMO, but how are the charts looking like for this one, and can she go ahead for a fresh investment at this point?
So not at this point. It could be a good chart. I remember, I think Strides Pharma is a stock which has historically paid heavy dividend. So on the chart specifically, the short-term indicators are overbought. In fact, on the weekly chart also, the stock is forming an inverted hammer kind of a pattern, which may probably have an impact in the next couple of weeks for the stock price. So it could be a good chart, but the timing may not be perfect. That's what I would probably sense looking at the chart and the candlestick formation for the stock. I would suggest that maybe wait out for another couple of weeks. In case if you get another 8%, 9% kind of a correction, say 480, 470, that could be a better point to buy the stock.
All right, the next one I have is coming in for you once again, Kunal. This one is from Sitaram Ganesh. He's writing to us from Chennai, and he's holding SRF since 2021 with just 4% profit. So now he wants to know whether he should look to exit this counter and invest the same money either in Zydus or in Sun Pharma. He's not mentioned with Zydus, but I believe it's Zydus Life.
So this could be a strategic shift which you could probably be taking, moving on from chemicals, specialty chemicals towards maybe pharma stocks. So it could probably be more relatable if you can look at the composition of your portfolio, whether you already have pharma stocks. If not, then I think maybe adding to Sun Pharma at current levels could be a good strategy. Maybe even Glenmark Pharma, if the stock corrects by another 10%, could be a good option over there. But I also believe that SRF on the more longer term basis now comes back into a major time wise correction zone. So the stock has periodically taken a huge support at the 2000 2100 levels. It's now coming very close to that kind of a band in terms of support. So I also believe that if in case whenever the time correction is over, the stock can come back towards a very strong potential upside over the next 1 to 3 years. So it all depends on your portfolio mix.
Okay, that's the take coming in on SRF. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your stock-related queries.
Welcome back. You're watching Buy Now Sell Now on ET Now, and markets are at the day's lowest point as we speak. But let's continue taking your queries, and this one is coming from Nagesh from Bangalore. Kunal, this one is for you. He's planning to buy October Havells 1400 call option as well as Reliance. I think it is 2340 call option. He wants your advice on them.
So it could be a good strategy, but my only point is with respect to the timing, because in case if the market say shows maybe another couple of days of weakness, you may probably be looking out to hold the call option, because they may lose out on the price value quite quickly, and to come back to that cost price may be a bit tricky. So what I would suggest is you can buy maybe 50% of the quantity at current levels and wait out for maybe another couple of days. In case if the market drops down say slightly bit more, I think that could be a better point for you to average further.
All right. The next one is coming from Sushil Kumar, writing to us from Trichy. Wants to know about Pitti Engineering. He's bought this counter 2 years ago at a price of 273 rupees per share. Wants to know whether it's a good time to book profits or hold on to the counter and exit for a higher levels. What's your take on this one, Mr. Prabhakar? Given the fact that he's been holding on to this count for the last 2 years, makes sense to hold on for the next 1 year or so?
I think he would have made very good money in Pitti Engineering. If that is the case, then taking profit would be better. No, it is based out of Nagpur, and they got few benefit. Sitting in profit, it is better to take profit.
Okay, better to take out profits from Pitti Engineering. But with this, viewers, let's kickstart taking all your stock-related queries in the rapid-fire session. And the first question that I have is from Karun, and for you, Mr. Prabhakar, he's holding 51 shares of Bharat Forge at a price of 1134 rupees. He wants to know, can this be a multi-bagger in the next 3 to 4 years?
I feel so. No, they have moved from their traditional auto to defense and other related areas. So I think he can hold on to it.
All right, Mr. RK has 3 stocks where he's seeing minor losses. Kunal, out of those 3, which one should he exit and hold? Rain Industries, Aurobindo Pharma, as well as Zen Technologies.
I think you should hold on to all 3 of them.
Okay, moving on, and Kunal, the next query is from Jai Krishnan from Kerala, and he wants you to pick 2 of the 3 counters for fresh investments: Paytm, Amber, or NTPC. Good time to enter these counters, or maybe at a lower levels?
Paytm and NTPC is what I would pick.
All right, this one is coming from Ephraim from Dubai, long-term investor holding Oracle Financial at a price of 4,326. Should he look to add some more of this counter, Mr. Prabhakar?
Yeah, hold on.
Okay, the next question is from Bala Murugan Kunal, and he's holding 500 shares of GAIL at an average price of 96 rupees. Wants to know the short-term target probably for the next 5 months for this fund.
Hold on for a short-term target closer to 128 to 135 range.
Right, Kunal, this one is coming in for Anil from Noida. He's saying that hearing your recommendation of Piramal, once upon a time he bought 40 shares of Piramal at a price of 1,070 rupees per share. The stock has been pretty subdued off those levels. Wants to know what should be the near-term target for it.
See, hold on to the stock. I've been bullish on the stock even from much lower levels. Yes, the recent recommendation was at a higher point, but then the stock looks attractive. Would recommend a hold.
Mr. Prabhakar, Shasta Mani is at a huge loss in Heritage Foods, holding 250 shares at a price of 400 rupees. Good time to hold, should he continue to hold on this particular counter or book losses at this point?
this company is politically connected. So till the government doesn't change in Andhra, it will have some problems. So it is better to stay away.
Alright, and with that we come to the end of the rapid fire as well as the query segment. Thank you so much Kunal as well as Mr. Prabhakar for joining us on the show as well as giving us your take on the crude derivatives. But with that, viewers, we are totally out of time on this edition of Buy Now Sell Now. Goodbye from Christy, myself and the team that put the show together. Stay tuned. Markets at Noon coming up next.